Most traders stare at dozens of indicators, but they ignore the one thing that actually controls every trade they take. Today I'm going to show you the one weekly candle that decides everything. This is why trading feels random for most people. They look at RSI, MACDs, patterns, news, but none of it tells them where the real money is sitting. Markets don't move because of indicators, they move because of liquidity. This candle isn't just a candle. The weekly candle holds the highest price, the lowest price, and the biggest pool of stop losses. That's where institutions hunt. Every week, traders buy near highs, traders sell near lows, and stops build on both sides. This creates the trap. When price takes the weekly high or low, it's not a breakout, it's a stop hunt. That's when liquidity is removed, orders get filled, and real direction begins. Every clean move starts with a weekly sweep. If you don't know where the weekly candle is, you're trading blind. That's why some days your strategy works, some days it doesn't, and you never know why. You were either trading with the weekly candle or against it. You don't need to guess direction, but instead wait for the weekly high or low to be swept, price to fail, then use CISD or fair value gaps to enter on the 5-minute chart. The weekly candle decides the bias, the entry model decides the execution. Let me show you examples on the chart. Here we are on the chart and I'm trading a pair called BTR. It's a cryptocurrency pair, but the strategy will work with any asset class. So what I've done is I've come onto the weekly chart and you can see each one of these candles is a weekly candle. So if I'm going to be trading this candle, I want to use the previous week's candle high. So you're simply going to come to the previous week and you're going to mark a high. And now this level becomes that weekly level. So now that you have your line marked, you can come down to the 5-minute chart. I'm using an indicator here called SMCX. It basically merges the lower time frame and the higher time frame. So it shows you the higher time frame chart with the lower time frame. This is the weekly candle and this is the 5-minute candle. It also produces CISD lines, sweeps. There's a free trial in the link below. So you can see over here, we can observe now that this 5-minute is coming close to the weekly high. You can see this is the weekly high over here. So let's play this out. You want to wait for price to come to the weekly high, then sweep and fail to displace. So you can see right now price has come to the weekly high. So this is looking good. Now you want to see it come back into the range. And you can see price takes out the high and comes back into the range. And we've got our CISD and price broke the CISD with a very strong candle. So this is where we can look to enter. But however, this might not be the best risk to reward because if we had to enter over here, look how big our stop loss would be. So we would ignore this one and we'd wait for a better quality setup. So we can wait for price to come, but still look at it. Even if we got into the trade, we still could have caught a nice setup. We still could have traded. So we're just going to leave it and wait for price to come back to the weekly high again. So let's wait for price to come back to the weekly high again. There you go. You see, now price is broken above the weekly high. We want to wait for the sweep to happen for price to come back into the range and wait for, there we go. Okay, so now it's come back. So we want to wait for price to come underneath and for it to break that CISD. So there you go. Price came back into the range. The CISD was created and now price has broken the CISD. So this is where we look for our entry on the closure of that candle. Stop loss comes just above the swing high or just above the weekly high, and then we can target the lower liquidity areas. This will be one area of liquidity to target, and down here would be another area of liquidity. So you can target the one, or you can target the both, depending on your risk and your tolerance. So let us play this out. First target was hits, that's great. Is price gonna go to the second target? See, at this point, you could move your stop loss down even to entry if you wanted, or you could leave it up. It's up to you and your style of trading. Okay, so price is not going to come down. Doesn't look like it's coming down, but it's tapped into that weekly high again and created another CISD. So there you go. So another CISD, can you see price came in, swept the high even though it was little, then it created another CISD over here, and then it broke the CISD. So we can enter again. Stop loss comes above the high or just above the swing point, and then we can target the lower liquidities. This would be our main target, and then we could continue to look for this lower target as well. All right, let's play this out. So there you go, the first target was hit. So you could exit at this point and walk away and be satisfied, or you could target a low liquidity. And this is our current price, so we'll still need to wait. But if you just zoom up and review the trade from a bird's eye view, you can see over here, every time price hits this weekly level, we get this dump, hits the weekly level, drop, hits the weekly level, gets a drop. So these could have been 3 very nice scalps you could have taken, small percentages with higher leverage, and you could have had some super great wins. This is why I built SMCX. It automatically marks weekly highs and lows, detects sweeps in real time, and shows CISD and fair value gaps. So you can see exactly when this candle is in control. If you want to trade this model without guessing, the link is below. There's a free trial to test it out. In the next video, I'll show you how I use this candle to get sniper entries on the 5-minute chart. I'll see you there.